Hi, good morning, everyone. We'll start now as sufficient number of people have joined. So I would request all the panelists to on their video, and I would request all the participant to keep themselves on mute so that it does not disturb others. Yeah, once people are still joining. Hi, good morning, everyone. Namaste and good morning to all the participants, and konnichiwa to all our clients from Japan. It's a pleasure to moderate today's session on Budget 2024, Challenges and Implications. India has been growing as fastest economy among bigger countries, and budget is the time when everyone looks to government and finance minister for what changes and new initiative are proposed. And this year was not different. While debate is still going on whether budget is good or not, we thought it should be appropriate to share budget provisions and how it's going to impact business and individuals. Government has been working on Viksit Bharat plan, and this budget is continuation of that. I was reading a view of famous economist who wrote, and I quote, that in economics terms, the budget is a macroeconomic dream come true. The budgeted fiscal deficit of 4.9% of GDP for current year from 5.6% last year is having a cut so sharp that many countries under IMF discipline would have difficulty achieving it. Yet finance minister has been able to do so while boasting of infra capex of 3.4% of GDP. Unquote. I feel there are both sides in budget on plus and minuses, and we can choose our side. For example, while there is lot of resentment on removal of indexation for capital gain purpose, removal of angel tax is a welcome step and brings special relief to startup segment. I've been a firm believer that tax on dividend and capital gain are dual taxation and should not be there. First, company pays tax on profits, and then shareholders pays tax on residual profit in form of dividends or increase in share price. But capital gain tax started few years back by taxing long-term capital gain at 10%. And this year there was speculation that this may go up to 15% or 20%. But 12.5% came as a surprise. Though everyone is still not happy. By the way, I thought to share the tax rate in US, which is up to 20% on capital gain. Well, budget can also sometimes change thoughts about safety of returns of an asset class, and this was one such year. Government reduced custom duty on gold, and this has impact on pricing of gold and sovereign gold bonds. So not sure how safe these are from returns perspective. Government has been working on ease of doing business, and as part of this, government amended various acts and decriminalized various provisions last year. The same theme continues this year, where government introduced Jan Vishwas Bill 2.0. On foreign investment, government proposes to simplify foreign direct investment regulation and expedite insolvency resolution through amendments in relevant act. Various changes are made in tax rates, TDS rates, buyback, etc. With these initial thoughts and introduction, I shall ask my esteemed panel of professionals to share their thoughts on changes. We'll split the webinar in two parts. In first part, we shall share provisions or changes, culminated by Ishikawa-san from Japan in Nihongo, and in the second part, we shall take questions. I shall ask my colleague C. Pritesh from Pune to start with changes in tax rates. Over to Pritesh.
Thank you, sir. Good morning, everyone. So we'll look at the changes in the tax rate and what changes, other changes are there in individual taxation. So Finance Minister Nirmala Sitharaman Madam introduced new tax regime in the year FY 2021. So initial years it was for most of the assessees, the old tax regime was beneficial. But as we have moved ahead and new tax regime has become old enough, it's been fifth year of old new tax regime. So it is now evident that the government is trying to move away from the old tax regime, and new tax regime is here to stay for most of the taxpayers. We can see this from the budget changes that FM has proposed. There are no changes proposed in the old tax regime for individuals. There has been no additional benefit or deduction allowed in old tax regime. Whatever benefits were there, they are continuing. However, they have not been increased, or there is no new benefit introduced for old tax scheme. Similarly, the tax rate for domestic companies, firms, LLP are same. There is no change in that. At the same time, to make new tax regime a little more attractive, FM Finance Minister has tweaked the tax rate under new regime a little bit. So, if as you can see on the screen, the existing tax rate and proposed tax slab. So, 5% tax has been increased up to 7 lakh rupees, which was up to 6 lakh rupees earlier. Then 10% is 7 to 10 lakh, which was earlier 6 to 9 lakh. So only the limit has increased, but the tax liability under 10% will remain the same. And then for 15%, it has become 10 to 12 lakh, which was earlier 9 to 12 lakh. And 12 lakh onwards, the tax rates are uh, existing and proposed. So as a benefit of all this exercise, a taxpayer having a taxable income up to 15 lakh will save 10,000 on basic tax in the proposed tax slab. So this is a small benefit given to make the new tax regime more attractive. And what it has also done is like up to last year, 3,75,000 was your threshold for old tax regime and new tax regime break-even point, you can say, where if you have investment of 3,75,000, old tax regime and new tax regime were equal in the tax liability sense. However, that 3,75,000 has now gone beyond 4 lakh with this 10,000 additional benefit. So if you have investment more than 4 lakh, investment as in housing loan interest, ATC, ATD, ATE, all these section HRA, if this total increases to goes beyond 4 lakh, then new tax regime is beneficial. Otherwise, the new tax regime would be beneficial for most of the assessors. Apart from this, there has been increase in standard deduction as well. Earlier, it for salaried class of people. Earlier, that standard deduction was 15,000. It is now increased to 75,000. So, resulting in marginal benefit of around 7,500 for 30% tax bracket SSC. And similarly, for family pension, the threshold is increased from 15,000 to 25,000. Now, there have been changes in STT. This is in line with the SEBI's recommendation and the concern SEBI has raised that the retail participation in F&O segment has gone up very quickly post-COVID. And the analysis of SEBI says that 90% of the retail investors have lost money in futures and option transaction. So to discourage future and option transaction for retail investors, the SEBI has been revised upward on options and futures as well. The next big change is in capital gain, which everyone is talking about. So can we move to next slide? Yes. So rationalization and simplification of capital gain. In the existing structure, there are multiple rate for capital long-term capital gain, 10%, 20%, and then the holding period is also varying from 2 years and 3 years. So 1 year, 2 year, and 3 years. So now it is only 1 year and 2 year. They have rationalized and simplified this capital gain taxation. However, if you look at this, look at capital gain from long-term listed equity shares, it has been increased from 10% to 12.5%, and at the same time, the exemption limit for which was 1 lakh has been increased to 1.25 lakh marginally. For immovable property, the rate has been reduced from 20% with indexation to 12.5% without indexation. So the rate is now constant, 12.5% for equity and 12.5% for other class of asset as well. The holding period remains the same. For bond and debenture, listed bonds and debentures, earlier it was 10% without indexation. Now it is 12.5% without indexation. The indexation benefit was anyways not there. And for unlisted bond, it was 20% without indexation earlier, but now it has been deemed short term irrespective of the holding period. So even if you are holding for more than 2 years or 3 years, it will still be short term. While making these changes, the indexation benefit which was available to assessee has been taken away, and it has created panic among property owners that how it will impact their tax liability. All of you must have received a lot of Excel sheets over WhatsApp or email saying that either that indexation was beneficial or the indexation was not beneficial. But ultimately, it is an Excel sheet. It gives you result based on what you are what inputs you are putting in. So the capital gain on a long-term asset depends on many things, like when you have purchased the asset, what was the cost of acquisition, what all improvements you have done on the asset. So considering all this, it will differ on case-to-case basis whether indexation was beneficial or the without indexation is beneficial. But if you look from a high level, what we can assume is the shorter the property is held, the beneficial new regime would be the 12.5%, because when you hold property for 3 years, 4 years, 5 years, the indexation benefit which you get is not very significant compared to when you hold an asset for a longer period of time, let's say 20 years, 24 years. So when the longer you are holding the asset, more beneficial would have been indexation, and shorter you are holding asset, the more likely you will benefit without indexation, because tax rate has been reduced from 20 to 12.5%. At the same time, the one major difference that is there in indexation and without indexation is now the most of the assessees who are holding properties for longer period of time, they will come under surcharge. So let's say your tax liability under without indexation and with indexation is same. Let's say 10 lakh rupees, but under without indexation, you will have to pay tax 12.5% plus surcharge, because for 10% for 10 lakhs of capital gain, your capital gain has to be 80 lakh rupees, which is beyond 50 lakh. That is the limit for surcharge. However, if you don't have yeah, if there was no indexation, if there was indexation, your taxable limit income would have been within 50 lakh for the same tax liability, and you would have been saved from surcharge. So this is one major change that will impact your liability, because in case of properties held for longer period, the income tend to easily cross 50 lakh rupees in case of real estate.
Sure. Thank you,
Apart from this,
Pritesh. Yeah, is there?
one more change is there.
Yeah. So,
Short-term capital gain on share has been increased from 15 to 20%.
sure.
That is also
Okay.
major change.
Thank you, Pritesh. And I shall ask now Dinesh to take up assessment and appeals, which is pain points for many of our clients actually. Sorry. Yeah, please. Dinesh, you are on mute. Can you please unmute yourself? Yeah, please restart. And request to everyone, please keep in mind that we have 5 to 6 minute slots. So let's adhere to that so that we have everyone can speak completely and we have sufficient time for the questions answer. Thank you very much.
Good afternoon, everyone. In this segment, we have divided our topics in 4 major changes, actually, which we will be covering in this particular segment. So the first point is relating to the change made in reassessment system. Finance Act 2021 has drastically increased the time limit for reopening of assessments from 6 years to 10 years, which was substantially high from any point of view, actually. Now, this Finance Bill 2024 has proposed to reduce the time limit from 10 years to 5 years in the case of specified cases. Actually, specified cases basically means where the amount of escaped income is more than 50 lakh rupees. So in those cases, now the cases can be reopened only till 5 years and not beyond that. So now say we are sitting in July 2024. So our cases till assessment year 2018-19 are time barred now, and no more notices can come. So this change shall be effective from 1st of September 2024, and then this change shall be implemented. So can we move to slide 2, please? So the second change is pertaining to the block assessment. So this is effectively a old wine in a new bottle, because this block assessment thing was there in earlier point of time also. So let's understand how this scheme shall work. In this scheme, actually, now suppose we are sitting in July 2024, a search take place. So this year in which the search is taking place, and the 6 years earlier to this, that shall be treated as a block period, actually, for which a consolidated assessment will be there. The provisions which were brought earlier In that, year by year assessments were taking place actually, which was quite complicated, and assessments were being done in a staggered manner actually, because assessing officer used to take 1 year, and based on the time bar, it will move to the next year. Now, what the provision says is the entire assessment shall be done as a block in one shot. It won't take that much time. And in that rate of tax which has been provided is 60%. So whatever escaped income is there on which additions are made, on that 60% tax rate shall be levied. Further, there is a provision for levy of surcharge as well, but as of now, that has not been specified. At a later point of time, that can come or may not come. And interest, they have clearly said interest won't be applicable under section 234A, B, or C. No interest shall be chargeable on this amount. Further, the penalty under section 270A, which used to be there earlier, would not be there for underreporting or misreporting of income. However, they have brought a new kind of penalty at the rate of 50% of the tax amount. So tax amount is 60%. So effectively 30% additional tax penalty would be there. And in total 60% plus 30%, 90% tax obligation would be there on the undisclosed income found during the search. However, there is a provision actually whereby a taxpayer, in case a taxpayer post the search, include this undisclosed income in its return of income and pays the entire 60% tax along with the return. In that case, no penalty would be charged. So there is a saving grace actually. Before assessment, you would be supposed to file a return of income. In that, you can include your undisclosed income and pay off the taxes. So that would save. Further, it has now stated that whatever assessments are pending, like it's in this 6-year period, in case any notices are pending before any authority, assessments are pending, so those shall be abated and they would be merged in this block assessment. So those assessments won't parallelly go. They would stop there once the block assessment has started. And the last point which I would like to inform is has been a time limit of 12 months proposed actually. In this 12-month period, the assessing officer is supposed to close the case and complete the assessment from all angles. So this appears to be a good move by the government. Hopefully it will work. The third change which we are going to discuss is pertaining to the charitable institutions. So charitable institutions actually parallelly two regimes are there actually. One is under section 10 subsection 23C and second is 11 to 13. So going forward, this 1023C will stop and only section 11 to 13 will continue. And the effective date is 1st of October 2024. So from this date onwards, all the applications for exemption shall be under section 12A only, and no, this 1023C will stop in totality. Further, under this charitable institution, they have brought in a new section 12AC, which would allow tax-free mergers actually of basically two trusts having similar objects, they similar kind of activities. They can just join hands and merge, and there won't be any tax implication in case certain conditions are satisfied. So can we move to the next slide? So this is a very good provision actually, which has the scheme of direct taxes Vivad se Vishwas scheme. This is on the lines of 2020 scheme, more or less. It is on the lines of 2020 scheme, which was there brought actually, because in last 3-4 years, so many cases have piled up actually before the commissioner appeals because of it being made faceless, and there is a large number of cases which are now pending. So to settle those cases and to liquidate the revenue struck in those cases, the government has proposed this scheme. And in this, basically, three kind of appeals would be covered. One important change I would like to highlight is in the 2020 scheme, what has happened was they have allowed the cases where the appeal time limit has not expired. But now only the appeals which have already been filed as of the specified date, which is 22nd of July, would only be covered. So as of 22nd July, in case your appeal is pending before Commissioner Appeal Tribunal, High Court, Supreme Court, or any objections has been filed before Dispute Resolution Panel, or 264 application is filed before Commissioner, they all shall be covered under this scheme. Further, the tax rates which shall be applicable in case you go in for it are given in the next slide.
All right. Thank you, Dinesh. So let's move to the next segment. So This is on withholding or TDS rates, which is going to be presented by SNR's Bangalore partner, Ritesh Sharma. Over to you, Ritesh.
Good afternoon, everyone.
Saurabh, can you move to next slide so that Ritesh can take it up?
Done, sir, already.
Yeah, thank you.
Is it visible, sir?
Yeah, Ritesh,
Yes,
over to you.
there. Yeah. Good afternoon, everyone. I'm sure everyone should be thinking we have already seen the change in tax rates. What is so big deal with withholding, right? So here I'd just like to present some of the facts which are there. If you look at there was a CAG report in 2022 which pointed out that of the total direct tax collections, the share of tax withholding, I mean the amount which the government is collecting from tax withholding of TDS had reached almost 40% of my direct taxes collected by 2021. And we have seen a lot of changes in the last few years. I'm sure we are nearing almost 50% of the taxes being collected through TDS. So that's the reason we thought we should have a specific section on withholding taxes, because non-compliance of this can also mean a lot of interest, fees, penalties, which taxpayer might be exposed to. And during the current year, if you look at the percentages, I believe the government expects to collect about 8 lakh crores by way of TDS. Right. So with those some of the facts, we'll move to the actual changes which are there. So one of the changes is, yes, the government has rationalized or rather decreased some of the withholding rates, wherein my insurance commission rate, the insurance commission which the insurance companies pay out, the rate has been decreased to 2%. This time government has found a fantasy for 2%. I believe many of them have gone down to 2%. So yeah, so insurance policy, wherever it is taxable, it is decreased to 2%. Commission on sale of sale of lottery tickets has gone down to 2%. Commission going down to 2%. Rent going down. So yeah, 2% these are. In addition, the e-commerce operator, what he's is deducting from e-commerce participant has been reduced to almost 10% of what was there earlier. That is from 1% to 0.1%. So this means increase in the revenue for the e-commerce participant, right? And we also had related to repurchase of mutual fund thing. The TDS is proposed to be omitted, and all these are going to be applicable from 1/10/2024. So yeah, so this is as far as the reduction in withholding rates is concerned. We now, to augment more of withholding taxes, government has come up with a new withholding tax, which is basically TDS on payment of salary, remuneration, interest, bonus, which a partnership firm pays to its partners. Law has deemed to be these payments to be business income. So now they are looking at collecting withholding tax right away during the year. And this rate is going to be at 10%, which will start from 1st April 2025. They kept a very small amount of 20,000 during the year. If you're paying less than that, there'll be no TDS requirement. But I think that 20,000 is as good as being nothing. Equalization levy on e-commerce operators is proposed to be withdrawn with effect from 1st August 2024. This is a welcome move, wherein it's more of simplification of things which are there. So yeah. We go to the next sheet. Next slide. This is a very welcome provision, actually speaking, because this is especially about TCS collected being put into place. Because if you look at TCS, there has been certain provisions there have been some changes which have been made in the budget. This would especially be beneficial where, today employees, HNI, who are earning good, they buy cars, right? So on that, there is a 1% TCS, which normally they end up claiming as a refund. So probably they could do that. And in fact, TCS provisions have been changed to include not only cars, there are going to be certain goods which are going to be notified, on which also there's going to be TCS also. So they could provide these details to their employers and probably have a reduction in the taxes in the same year instead of claiming it in the taxes. Yeah, I think this is more of yeah. So this is more of extension of lower deduction, which is being extended to even 194Q and 206CH, which is basically TDS on purchase of goods. That's, yeah, I think these are the ones which are regarding in the withholding taxes.
Thank you, Ritesh.
Thank you.
I think the reduction in TDS rates will help companies and individuals also to better manage their working capital. So I'm sure it shall be good actually from the business side. Over to Saurabh Pawar now. He's a tax partner of SNR and company. Over to you, Saurabh.
Yes. So good afternoon, everyone. As far as corporate taxation is concerned, there are some paradigm shifts in the way some transactions are being taxed or will be taxed going forward. So first and foremost, the major change that has been proposed in the finance bill is regarding the taxation of buyback. So up till now, Section 115 QA was there that provided that the companies have to pay 20% additional tax as buyback tax. So the government has decided that with effect from 1st of October, this buyback tax will not be applicable on the company. So the consequential amendments have been made under Section 10, subsection 34A, Section 57 and 194 that basically provides for taxation of the same amount in the hands of the shareholders, as well as the deduction of TDS on the same. So what government has done is they have kept this buyback amount that is being received by the shareholders in pair at par with the dividend that they will be receiving. And for this, that they have also amended Section 2, subsection 22 by adding a clause F to that basically defines the deemed dividend. So there will be a deduction of tax rate source of 10%. The same income will be taxed in the hands of the shareholders. Second point, the major amendment that has been done is regarding the angel tax that has been abolished. So back in 2012, the government thought that by way of this angel investment, certain dubious activities are being carried out, such as money laundering, etc. But now, in order to boost the overall startup environment in the country, the government has decided that this angel tax has to be abolished to avoid or to protect the eligible startups from the hindrances such as TDS valuation rules, non-compliances, etc. So Section 56(2)(7)(b) has been abolished, which earlier provided that where the company received consideration for issue of shares in excess of its fair market value, then that excess has to be taxed. So now this 56(2)(7)(b) has been done away with, is proposed to be done away with actually. Yeah. So the next small amendment that has been done is to bring the private employers at par with the government employers, and as far as NPS contribution is concerned. So earlier there were the government employers can make contribution up to 14% of the employee's salary and claim reduction of that under Section 36(1). Now that this 14% maximum cap has been extended to the private players as well. And consequential amendment has been done in 80 CCD2 that provides for allowability of deduction to the employees. So the private employees can also claim deduction up to 14% of their salary. This amendment regarding disclosure of foreign assets in ITR is more related to the Black Money Act. So earlier, what the limit of disclosure was 5 lakh rupees. So in case the value of foreign assets was 5 lakh rupees and a taxpayer was willingly or unwillingly forgot to disclose that asset, so the penalty of up to rupees 10 lakhs could have been levied. So now the government has increased that limit of 5 lakhs to 20 lakhs. So this is regarding Black Money Act Section 42 and 43. So foreign assets up to 20 lakhs can, if not disclosed somehow, no penalty will be levied upon that. So coming forward, so now this is regarding the eligibility, allowability of maximum remuneration to the partnership firms as well as LLPs. So this is regarding Section 40 Clause B of the Income Tax Act. Earlier, the limits were quite less. So as you can see, the existing limits were up to, if the book profit of the firm was up to 3 lakhs, then the maximum limit was 1,50,000 or 90% of the book profits, whichever is more. In exceeding, if the book profits exceeded rupees 3 lakh, then for amount in excess of 3 lakhs, it used to be 60% of the balance amount. Now that 3 lakhs limit has been extended to 6 lakhs, and the eligibility amount of 1,50,000 has been extended to 3 lakh rupees. So it will allow firms to provide more remuneration to the partners and also have a deduction of that amount in their hands.
All right. Yeah.
This is a small amendment relating to the foreign companies. So their flat rate of 40% taxation has been reduced to 35%. Of course, surcharge and cess, whatever is applicable as per their limits, will be applicable on top of it.
Nice. I think, thank you, Saurav. It was very nice. So one particular thing which I thought to highlight, like Saurav said, that angel tax has been taken out. Now, this was very burdensome for the startups, especially where the venture capital or the angel funds, they have special eyes for the startup businesses. So the valuation at which the investment were done at a very significant value in comparison to the book value or what is visible in the business. So there was a lot of dispute in terms of the founders and the investor who were doing the investment versus the income tax authorities. As per income tax authority, while it was intended to avoid the black money, but it affected the startup community very hard. So I think this is a very welcome move by the authorities, and I'm sure this shall foster startup culture and startup. It will help startup community very well. Over to our next segment, which is GST, and Dinesh is going to present on this. Over to Dinesh.
Thank you. Yeah, thank you. So in this segment, we shall be covering 6 important changes, though there are not many changes actually which are done through finance bill based on the recommendations of 53 GST Council meeting, which was held on 22nd of June 2024. Post that meeting, a large number of circulars has already been issued, notifications have already been issued, and now the legislative part has started, whereby certain amendments in the CGST Act, UTGST Act, and the IGST Act are being carved out actually. So under this changes, the first change is in relation to extra neutral alcohol, ENA, which is used for manufacture of alcoholic liquor for human consumption. So as such, alcoholic liquor for human consumption was always out of the GST purview. But this ENA, there was litigation going on whether state has the right to tax or it is covered under GST. So through this amendment, it has been clarified and it has been taken out of the purview of GST altogether. And it shall lead to solving of the litigation which is already cropped up across the country. The second change, which the government has brought forward actually through amendment in the finance bill, is to give the government the power to regularize certain taxes which are not paid or paid at a lesser amount by industry as a whole through a practice. Suppose there is a restaurant sector actually, and restaurant sector decides or understands a provision of law in a certain fashion and accordingly start discharging its liabilities. So in that case, government is now empowered to accept that industry practice and allow that whatever has happened, and henceforth this shall not be done and this shall be done. So government has earlier also done that, but there was no legislative backing or enabling provision in the law. But now this section 11A has been inserted in the GST law, and similar kind of provision used to be there under central excise law as well. So can we move on to the second slide? So the third change is very big change actually, which is going to help a large number of taxpayers across the country, because there is a time limit which has been prescribed under section 16 subsection 4, whereby you can take the credit up to the date of, earlier it used to be the date of due date of return filing of September return or the annual return, which is earlier. And now what the government has stated through this amendment is 2 subsections are inserted, subsection 5 and subsection 6. So subsection 5 basically says that if credit pertains to financial year 17-18, to financial year 2021, any of the years, and it has been taken in any of the returns which is filed by the time of 30th November 2021. So in that case, that ITC shall be eligible, because we have observed that in many assessments and audits, these kind of issues are being raised, that credit has been availed beyond the time limit actually. So now in those cases, in case the appeals are pending or assessee has not deposited the tax, then we can take the shelter of this new provision, because it's a retrospective provision. But there is a issue, they won't be giving a refund actually. They are saying in case you have paid the tax in good faith, paid the interest, paid the penalty, then nothing doing, you can't take the benefit of this provision and seek refund from us. But in case that is still being disputed, then you can take the benefit of this amendment. And second change is insertion of subsection 6, which basically there are cases of cancellation of registration. So once the registration is cancelled, you are not able to file your GST return. So obviously you won't be able to take the ITC credit as well. So now this subsection has provided the period during which you could not file your return due to cancellation of registration from the date of cancellation till the date of revocation of cancellation. In this return, whatever ITC was due to you, you can claim that credit within a period of 30 days from the revocation of cancellation. So like once your registration is, cancellation is revoked, so then you can file all your returns, claim the ITC within a span of 30 days, and that credit shall be allowable to you. So this subsection has been inserted, and this is a permanent, this shall be a permanent feature because cancellation are going to happen. So the fourth change is basically pertaining to section 73, which is used for non-fraud cases, and 74, which is used for fraud cases like willful misstatement or concealment or suppression of facts, etc. Both these sections were there, actually they were used to run parallelly. So now both these sections have been put under a sunset clause. They shall be applicable only till financial year 23-24, and they would lose their applicability beyond this period. So this change has been made, and new section 74 capital A shall take over, and this section 74 capital A is going to be a section which shall cover both the cases, fraud and non-fraud, and a combined same time limit for both kind of cases of 42 months from the due date of filing of annual return. So any notice from 24-25 onwards can come from the department only till 42 months from the due date of return filing, which is 31st December 25 in case of 24-25. Only till 42 months it can come. So like the time limit has been reduced to an extent actually in fraud cases. Similarly, in penalty also, they have increased the period from 30 days to 60 days. Like through this amendment under section 74, there is an additional time limit of 30 days. In case you paid, then you would be eligible for a lower penalty. And the last is also a very welcome change which has come up, is in relation to conditional waiver of interest and penalty. So like from 70, and this shall be applicable from financial year 17-18 to 2019-20. In case your demand is pending and or you have made an appeal, so in those cases what you can do, you can pay the tax amount, whatever tax amount has been demanded by the department by 31st of March 2025 in full. Then this interest and penalty shall be waived off. But there is a rider there. These shall be only for those notices which are non-fraud cases, like they are issued under section 73. In case your notice is issued under section 74, then you can't take the benefit of this particular clause. Thank you.
Okay. Thank you very much. So we have, thank you everyone. Now we have Ishikawa-san from Japan. He's a CPA from Japan with 25 years of experience helping Japanese company in Japan or in India. So I would request him to take up and give his views on the budget and the relevant changes from companies, Japanese companies who have their operations in India. Over to you, Ishikawa-san.
Good afternoon. Can you hear me?
Hi, Ishikawa-san. We can hear you. Please.
Good afternoon. My name is Ishikawa from Japan. Actually, I'm not an employee of SNR. However, my old friend, Mr. Manoj, invited me to this seminar as a speaker. So now I want to speak, several points. I'm not sure that there is any Japanese here or not, but let me explain several points which Japanese may be interested in Japanese. I really appreciate your patience in 4 to 5 minutes if you don't understand Japanese. So let me explain in Japanese. 石川と申します。これから日本語でちょっと説明させていただきます。今回の、バジェットで、英語でこれまで説明をしてきた、SNR の、皆さんが説明してきたと思うんですけれども、僕の方から、日本人が興味あるポイントだけ、ピックアップして説明させていただきます。まず、個人所得税のスラブのチェンジ、が変わりました。これによってどれぐらい減税になるかと申しますと、大体年間で2万ルピー弱ぐらいの減税となります。ですので、大きな減税、日本人の駐在員にとっては大きな減税とは言えないのかなと思っています。で、次に、こちら、日本人の駐在員の方が気にするようなことではないかなと思うんですけど、TDS のパーセンテージ、特にコミッションですね。多くが、例えば、アパートの、紹介を、アパートを買えるときに、不動産業者から、紹介いただいて、その時にコミッションを払うと思うんですけども、このパーセンテージ、DDS のパーセンテージが、5% から2%に、10月からスタートすると思います。あと、他にも、もし、御社の方で自社株買いを、検討されている企業さんがあるということであれば、この点に関しても、税金の、考え方というのが、変わってきてますので、ご注意ください。あと、通常の、今、おそらく、日本人の方が、確定申告、インドでの確定申告を進めているんじゃないかなとは思うんですけれども、通常の居住者になった場合、海外資産の開示が必要となります。これの開示の、どこまで開示しないといけないのかっていうところなんですけれども、もし200万ルピー以下の海外資産の場合であれば、海外資産の、開示が不要ということになっています。また小さな、変更なんですが、海外企業の、インカムタックスレートが40% から35% になっております。ほとんどこの海外企業で課税されるケースっていうのはほとんどないかなと思いますので、こちら、ご参考までに、頭の片隅に置いといていただければなと思います。で、最後にですね、GST の、件なんですけれども、こちら、先ほど、SNR の方が、説明をしていただいたんですが、このちょっと前にですね、先月、サーキュラーで、話があったと思うんですけれども、2017年度から2019年度の、GST の、納税漏れが、これ、多くのケースっていうのは日本人の、費用の件だとは思うんですが、これに関して、利息とペナルティが、免除になるという話が出ておりました。ただですね、ここちょっと気をつけていただきたいのが、スピーカーの人も、英語では話していたんですが、あくまで、セクションナンバー73に該当する場合のみ、延滞利息と、ペナルティが免除ということになりますので、もし、税務当局から、セクションナンバー74の方で、指摘があった場合には、こちらのその免除、利息の免除と、あとペナルティの免除は適用されないということになってしまいますので、この点に関してちょっとご注意いただければなと思います。また、今年度からセクションナンバー73と74のこの違いがなくなりまして、これが統合されて、ノンフロードでもフロードでも、同じセクションナンバー、セクション 74A、かな、が適用されて、年次申告から42ヶ月以内でのノーティスが発行されるようにはなります。それを超えるようなノーティスに関しては無効とはなるという、 形になりましたので、覚えておいていただければなと思います。私の方から以上です。Manojさん、Thank you very much.
Hi, Ishikawa-san. Arigato gozaimasu. Thank you for accepting our invite to share your insights for Japanese companies. We shall be sharing the recorded version of this webinar with all the Japanese clients, and we'll ask them to listen to you. Thank you very much. All right, this is all what we have. We have received some of the questions directly. So what I shall do, I shall ask these questions to few of my colleagues and panelists. So first question is to Saurabh Pawar. I think it should be Saurabh, if you can answer this. In case an immovable property is acquired before 1st April 2001, whether indexation would be available in that case or no, and what cost should be taken?
Yeah. So, sir, the amendment that has been done is it is proposed in section 48. So the second proviso of section 48 used to say that benefit of indexation can be taken in all of the assets except a few bonds and debentures. So now the amendment has been done wherein a sunset clause has been provided in of the date, specific date, post which indexation will not be provided. The rule for valuation as on 1st of April 2001 is provided for in section 55. So that stays. So which means that assets acquired before 1st of April 2001 can be valued. Their value can be brought in on 1st April 2001. Post that, indexation will not be available. So in case an asset is purchased, let's say 1990, their FMV is to be calculated as on 1st April 2001. And after that, that will be their cost. No indexation will be provided after that.
Okay, understood. Fair. Thank you. So buyback is a very important change actually, which has come in this year. So there are like promoters have been very concerned because this buyback is a way where through which companies promoter can take out the profits from the company, which actually belongs to them only as a shareholder. But then buyback is proposed to be made taxable at the normal tax rate for shareholder. So there are two questions on this. I would ask Saurav again to reply to first and then to Ritesh. So Saurav, over to you. Please explain again the taxability of buyback proceeds in the hands of individual shareholders.
Yeah. So, sir, as we have discussed some time back, so section 10 subsection 34A used to provide exemption to the shareholders from taxability of buyback proceeds. So now section 1034A has been, to be eliminated from 1st of October 2024. So now what happens is whatever proceeds the shareholder will get will be taxable as a dividend in their hands as per their slab rates. Now the next question arises is if the consideration is being taxed, so what happens with the cost? So they must have paid some cost to acquire those shares. So the government has said that that cost will be treated as a long-term capital loss that can be carried forward and set off against their capital gains income in the coming years. So to conclude, the entire consideration is to be taxed in the initial year. TDS at the rate of 10% will be deducted under section 194. Section 57, which says that from dividend income, some commission, etc., can be claimed as an expense. That benefit is also not available for the buyback consideration, which means the entire consideration is to be taxed, and the cost of acquiring those shares will be treated as a long-term capital loss, which can be set off against income in the coming years.
Understood. So what we are saying in a summary is, let's say if I do a buyback at 100 rupees and I did not, so I subscribed to the shares or bought the shares at, let's say 30 rupees. So I shall need to pay tax on complete 100 rupees.
Yes, sir.
Not on 70.
Yes, sir.
And this 30 rupees, which is my cost, can be carried forward as a kind of a capital loss. Now, this is very unpleasant to hear actually to the ears from a shareholder's point of view. But the fact, what is it is actually it is. All right, coming to Ritesh now. Ritesh, the next question what we received is whether company is required to deduct tax on buyback proceeds or not. Whether the company for this buyback, whether the company is required to deduct tax on buyback.
I believe it would be covered by deemed dividend provisions. So there would be a TDS which will be required. I will need to look up for the provision specific section as such. But then, yeah, there's going to be TDS.
Dinesh, you
So
want
this
to add
would-
to
So
this?
as explained by Saurabh, so this shall be treated as a dividend only, and it shall be covered
Yes.
under Section 194 itself, and at 10% TDS need to be deducted actually. So they have what they stated is this buyback shall be treated at par with dividend actually,
That's
and a
right.
new Section 222F has been created for this. So
Sure.
at 10%, the company need to deduct the TDS.
Sure. All right. So same like while the companies has been paying dividends, so they were deducting 10% tax on the dividend, while the shareholders were required to pay tax as per the slab rate. So that continues. Buyback is also included in that part. Fair enough.
Right.
So one of the last question which I received is, I think this is related to GST. So I shall ask Dinesh to answer this. So an order has been passed by GST state authorities for financial year 2019-20 with interest and penalty. How we can take the benefit of waiver scheme which is proposed now?
So obviously this is a good question and very pertinent question because all the orders would be passed in the, for financial year 1920 by 31st of August 2024. And as of day, this particular section which is going to be inserted is yet to be inserted. Actually, it's under the legislative process. So like finance bill has been presented that shall be approved, finance act would be there. And gradually the state governments would also amend their respective state GST acts. But it is going to be a time-taking process. But the law has already been recommended by the GST Council and the central government has already taken the requisite steps for making it part of the law. So what we can do is based on that order, we can deposit the tax amount and request the assessing officer or the audit team actually to keep the interest and penalty demand in abeyance till the legislative process is completed. And then obviously they shall be waived because the only condition we need to satisfy is that the order should be under Section 73 and the principal demand that has been paid by 31st of March 2025. In case we are satisfying both these conditions, so obviously interest and penalty shall be waived. It's a matter of time only.
Sure. Thank you very much. Thank you everyone for joining. We have Mr. Raju Vyas also from SNR and Company. He is the senior partner of a firm of the firm. So may I ask Rajuji to share a few words to conclude this budget session? In case he is available. Rajuji, are you available, Raju sir?
Yeah, good afternoon, everybody. It was in fact, the interaction has been very good. I'm sure that it must have removed so many doubts our participants would have been having. So it's an excellent initiative by Manoj, I believe. And I thank everybody, those who have participated. And in fact, Manoj, I look forward to such kind of webinars going forward as well.
Sure.
And thank you so much. Thanks everybody joining this particular webinar. Thanks.
Okay. Thank you everyone for joining. We shall be putting the recording of this on our YouTube link and we'll share this. In case you want to hear any part of this, you can listen to it. Thank you very much. We are on time. We shall finish it. Thank you very much. Thank you everyone for joining.
Thanks. Thank you.
Thank you.